Good morning, everybody. Happy Monday. It is the 3rd of April. We are Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, not too bad, thank you. Not
Good
bad.
weekend?
Yeah, it was all right. All right. Licking my
Good.
wounds from 12:30 on Saturday, obviously.
Yeah, absolutely.
But I was cheered up by Arsenal doing okay.
Yeah, so was I. It was a good day in the stadium, thankfully.
Yeah,
So, yeah, only 9 games to go.
yes, come on.
Yes. Okay, right. Let's avoid any more chat on the football for now and get stuck into the latest headlines then and what's moving markets as we approach this Easter weekend. So over the weekend, or on Friday, we had a sliding headline: Eurozone inflation. It declined to 6.9% for March from 8.5% the previous year and below the consensus forecast of 7.1%. The headline rate was cut by a decline in energy prices, and there was also very favourable base effects as energy prices surged last year. We also had US core PCE prices edging lower. The index increased 0.3% for February, with the year-on-year rate declining to 5% from 5.3% and slightly below the expectations of 5.1%. The Fed reinforced data dependency. New York Fed President Williams reiterated that data will drive monetary policy, although he added the bank stresses will lower consumer spending. Oils had a big jump over the weekend, which we'll come on to shortly. A big gap on the charts to start the week. OPEC Plus announced an unexpected decision to cut oil output by 1.15 million barrels per day. The move triggered a surge in oil prices at the Monday open, with WTI spiking to a 2-month high. Are we having troubles with the stream this morning, Steve, are we?
Yeah, it looks like the TradingView stream is not working.
Ah, that is a
Well,
shame.
yeah, I mean, there's a few people trying to get online, but I can't see anything.
Okay. In terms of other news, the dollar regained ground. The jump in oil prices increased speculation that the Federal Reserve would have to be more aggressive in raising interest rates. The dollar also posted gains, while the yen and euro came under renewed pressure. There's been limited setback for risk appetite. Overall risk conditions remained firm on Friday, with strong gains in Wall Street equities for the day. The mood was less positive on Monday following the jump in oil prices, although equities were relatively resilient. And overnight, we've got the next round of interest rate decisions. The Reserve Bank of Australia will announce its latest policy decision on Tuesday, with consensus forecast for a further increase of 25 basis points, taking the overall rate to 3.85%. Yeah, so if anybody's watching, there is a link in the bio on TradingView to watch us elsewhere. I won't say where, just in case I get in trouble with the TradingView police, but hopefully you can join us. It appears like a few of you have. Rice is saying up the Arsenal, which is always good. Love that. So, Steve, let's get into some charts, shall we? Let's have a look at how things are shaping up.
Yeah, we'll take a look at Bitcoin first. Let me share my chart. I'll share my screen. Here we go. Yeah, well, let's take a look at Bitcoin first. We had that massive rally we got from the week of the 13th of March. And since then, we've had two dodgy candles, as Taff would say. And we've stalled at that really sort of like big resistance area between 28,800 and 32,500. So this is the first real test as far as I can see for the sort of like the more medium term picture. And so far it is failing, but there's still hope there yet. But obviously the daily chart is now sort of setting up potential topping formations, which are like something like a double top formation. So if we do manage to give up these gains, or do manage to break down below 26,500, that could open up quite a decent measured move target of, you're probably looking at about 2,500 points on the downside. Next level of support underneath that is 25,400. So and the measured move target for the double top would be below that. But at the moment, yeah, just last 3 days of price action have been slightly negative. Obviously, this trades over the weekend, and today has been we've followed through on the downside. Really, the initial test of support 27,580. That's from Friday's low. And then after that, we've got last Monday's low, which is 26,541. So watch out for that. Ethereum is tracking the Bitcoin in a similar fashion. Again, potential for a topping formation here, forming this double top. Momentum sort of stalling as we've sort of hit these resistance levels. The resistance level is up around about 1860. That's where the swing high was from the 23rd of March. The low from the 27th of March, 1687, is the neckline of this potential double top formation. So look out for that. 1730 seems to be some sort of pivotal level. It's like a magnet, keeps attracting it. Overnight price action has been negative, but we've pulled back a little bit to the upside in the last couple of hours. And XRP, taking a look at XRP, making sure we keep an eye on this one here. Again, that spiked through the resistance at 55.80 cents, and we actually got up to 58.48 on this chart before reversing those gains. Slightly negative start to this week, but still a long way to go. So if we look at the 4-hour chart, we can see that this automated Elliott wave is looking at this being basically the fourth leg correction before we continue higher in the fifth leg. Wouldn't be surprised about that, actually. I think there's a little bit more to this story than the rest of the cryptocurrency, so watch out for that. Take a look at commodities now, and one market that's really been interesting, especially for myself. I love trading gold and looking at gold over the last few weeks, is the overall safe haven effect and that benefit from the weak dollar. A dollar index still hanging around that 102 to 103 area, and yeah, I talked about this symmetrical triangle the other week, and I remember I said that normally you tend to get with these symmetrical triangles a bit of a false break before the move. We are breaking to the downside on here, and we've broken to the downside overnight, and we've reacted higher as well. So is that the false break that we were looking for? Who knows? Trading around 1957, that's quite a nice level. It still feels bullish overall. The neckline really that we have to watch, or the support level we have to watch, is 1935 in gold. As long as prices stay above that 1935 level in the short term, I think there's a great potential for further upside price action. Might sound obvious saying that, but yeah, just really sort of like trying to focus on that key level of 1935, which will be a real support area. If we break down below that, again, that will show that this topping formation has formed and open up a sort of decent move to the downside. So the initial dip down, let's take a look at how that affected maybe looks on the 4-hour charts. We can see that we have sort of like hit the bottom of that Ichimoku cloud support, and we have got initial support at 1945 before that 1935 level comes into play. On the Elliott wave, that's saying that we're in basically the C leg of an ABC correction before potentially a projection higher. So overall, it looks pretty positive, gold does for me. And if we do get further dollar weakness, I think this will explode higher. So we're not far away from the all-time highs, 2075. I still think we could see those types of levels in the not too distant future. So positive on gold. Take a look at crude oil. Crude oil's been interesting. We had outputs cuts at the Friday from OPEC plus nations, I think it was. And we can see what that's done to the market. This is WTI crude oil, closed on Friday at 75.69. Nothing special, didn't feel like anyway. And then this explosion higher has taken out the resistance level at 80.72, which we had highlighted on the charts. And it's reacted lower from taking out those. So I'm sure we saw plenty of stops to the upside this morning, short covering, and then taking out those levels and then reversing sharply lower. So there's a big gap on the chart, on the daily charts, and at some point I would expect that to be filled. And obviously on the weekly chart we've got that as well. So that comes in So support really 75.65. It's a long way from support at the moment, and very sort of like difficult to justify trading that from a sort of like good risk reward perspective. So yeah, obviously Brent crude oil, similar sort of price action. That is trading at about a $4.30 premium to WTI crude oil. On the 4-hour chart, we've got the Ichimoku cloud looking for this third leg of the impulsive move higher. Potentially we've formed that now, maybe looking for this fourth wave correction, looking at targeting a move back down to between $80 and $77, and this is like quite a nice impulsive move to really get your teeth into. As long as we don't get back below 75.67 on the Brent crude oil, then this impulsive move will stay intact. Natural gas, that has formed a new, well, yearly low, definitely. What did it get down to? $2.08 really. Well, let's round it up a little bit. Took the previous swing low out, which was formed around about the 22nd of Feb, and we obviously opened up a bit lower this morning and reacted to the upside for ever so slightly. So again, there's a bit of a gap on the charts, but we've got plenty of gaps on the charts for natural gas on the upside, so we can't get too sucked in by it. This the overall spike higher to 305 cents has given up those gains and rejected lower, and formed a nice measured move target for that. So that's under pressure still, natural gas, while the obviously crude oil is flying higher. Natural gas still remains under pressure because we've got plenty of it at the moment, all stored. So yeah, we'll take a look at the FX markets, and then I'll dive into indices before we jump into count ahead.
Yeah, cool. Okay, so dollar index first up. We can see there was a bit of strength there on Friday. We found support yet again at this 50% fib level and 78.6% fib level. So there's a confluence there. We can see it was a decent bounce. We were still inside the selling that we saw on Thursday, but we've moved to the upside again today, and we've actually filled that gap that was created at the start of last week. So we'd highlighted that level at 102.83 as potentially being an area of resistance that needed to be overcome. And we can see that prices have rallied higher this morning, still higher than where they were at the open today, but have run into this gap at 102.83, and that appears to have stalled things ever so slightly this morning. Potential maybe for a bit of a breakout of a short-term downtrend here, but again, prices stalled into that level there. So suggesting really that maybe we'll see continued downside in the dollar index. It needs to do a fair bit more before we can get too excited about dollar moving higher. If we take a look at the markets linked to that, we can see Euro US dollar rallied into resistance here. There's 78.6% fib level, done a job on 3 separate occasions. We engulfed the gains that we made on Thursday with Friday's session, and we actually gapped lower overnight today before moving as low as 107.90, but since then have bounced, and it's been a similar situation on cable. Now, this just come up just shy of these previous highs, as you can see here, around 124.30. Reversal candle posted on Friday, didn't engulf Thursday's session, but we have seen a small gap to the downside here, and a break of the short-term trend. So we need to try and recover that pretty early on. And if we can, that would suggest that we may see a continuation higher again to retest these previous highs that we posted in December and in January. Just take a quick look at the intradays here actually on some of these. So the gap is very, very small in there. It's actually already been filled pretty much as soon as prices opened last night. So that's all taken care of. So decent bounce this morning. Looks to be pushing to the upside. In terms of where it's going to get to, maybe a challenge of the reverse side of this broken trend line may provide an opportunity to sell it. And given that where we are on the daily, and then we've got pretty significant resistance up here, I think that would probably be my bias. But of course, we need to see a bit more from the dollar index before we can get too excited about that. So a fair few requests on the stream, so I'll get to those now. Let's start off from the top and look at dollar Swiss. So this is requested by Rice. So we can see here that prices have been pretty choppy and sideways for some period now on dollar Swiss, we can see there's a big area of support between 90.99 to 91.39. And while that continues to be the case, there is potential for a bounce. But of course, we need to be aware of what's happening with the dollar index, because while that continues to be a little bit uncertain, although it is finding support, as we highlighted at that 50% and 78.6% fib levels, then maybe there is potential here for a bounce. So in terms of the preferred play, I think my bias would be for an upside move here, providing these support levels hold, of course. So from a risk reward perspective, if you're buying around here with stops below these lows, the low being from February the 2nd, and then maybe looking to target a move up to these highs, you're just about scraping 2 to 1 as a risk reward ratio on that. So yeah, buying dips into this kind of region here, targeting a move higher would be my preferred setup on US dollar versus Swiss franc. Let's take a look at these sterling 1 cents, take a look at sterling yen. So as we highlighted last week, we saw the break of this downtrend line. We saw that on Wednesday with a really impulsive move higher. Prices then continued to move higher on Thursday before stalling a touch on Friday, coming up just shy of this 61.8% Fibonacci retracement level and posting a bit of a shooting star candle actually. But if we look at today's price action, we can see that we gapped to the upside, we then moved lower, and then we're back to pretty much where we opened on the Sunday night open level. So very choppy on this at the minute. Let's just take a look at the intradays here just to see what's shaping up. So this is the gap that I'm talking about. So this is where prices closed on Friday. This is where they opened on Sunday night. So a fairly substantial gap to the upside there. In the hours following that, we saw prices pull back to fill that gap and did a reasonable job. We did get a little bit of an overshoot of that level, but ultimately it's held and prices have started to move back to the upside. So we've got a decent gap fill there. And as we can see in the short term, the trend looks pretty decent. Although if we drew a trend line on there, we can see there are multiple touch points. So we need typically 3 touch points to confirm a trend. And we've definitely got that. And we've got the break of trend. So maybe upside will be limited on that basis. But yeah, overall, it's pretty choppy. So I'm not really sure where to head with that at the moment. Let's take a look. So I've been through sterling, US dollar, done sterling yen. Identified that there's a gap there, Mark, on the hourly. Let's take a look at euro yen. So this was a good spot from Lompro last week, who's joined us on YouTube. Thanks for coming. And we can see here downtrend on the chart. We discussed this level because we saw a big move to the upside above this, but we noted that if it didn't close above it, then there was potential for a bit of a reversal, and that's exactly what we got. So we actually challenged these previous highs from the 2nd of March. So a swing failure there, posted lows below that level, actually closed below the low of the close of the open of the previous session as well. And again, we've got this candle here which indicates a lot of choppiness. So we saw prices move to the downside. Now we're back to where we saw prices open. And again, if we take a look at the intraday charts, we can see there was a gap formed here overnight. Let's just highlight that quickly. So there was the gap from Friday to the open on Sunday. We've pulled back to fill that and prices have rallied again. Now we're into some resistance, only minor resistance at 144.68. So if you are still trading from the bearish side, and I think given what we're seeing on the daily, that is probably the correct bias to have because we've got this downtrend and prices have failed to close above that of late, then I think from a risk reward perspective, you could probably eke out a decent looking trade from here. So selling roughly into this level, obviously you've got to have your stop pretty much above these highs. So that's going to be pretty wide, but then we could look for a reasonable pullback on this, and if we target some maybe fib levels to give us some indication of where to look for, maybe a 50% or 61.8% pullback will give you a risk reward ratio of about 2.2 if you're looking for a 50% pullback of this short-term uptrend. So all in all, it's been a pretty choppy start with some of these currencies, so do be careful. Let's also take a look at Aussie yen. And we can see here on Aussie yen that we've seen a decent breakout of this kind of ending wedge formation here. All in all, the trend remains bearish. We had a big head and shoulders top. We then saw this corrective channel, which broke down. And then we've got another wedge formation here, which has broke to the upside. On Friday, we posted a nasty looking candle, but we've gapped higher today and pushing higher again. So let's take a look at the intradays here. We can again see the gap that we've got on the chart. We've pulled back, we've filled that gap, and prices have rallied to the upside. So where would I be looking to trade this? Probably in and around here. So a challenge of the reverse side of this broken channel. And from an intraday perspective, we'd probably be looking to sell somewhere around there, targeting maybe a pullback to these lows again. So that may be a decent intraday setup there, selling Aussie yen into around 89.44, targeting a move down to 88.62 with a stop at 89.75. So I'll leave it there on the currency, Steve, and you can run us through some indices.
Okay, mate. Lovely. Cheers. Yeah, let's take a look at the FTSE to start with. We're start with the weekly chart. We had a pretty decent week last week, and we've formed this morning doji star formation, which has seen a rejection of the sell-off from the weeks of the 6th and the 13th of March. We bottomed out the week of the 20th of March, and the reversal last week was pretty impressive. We've taken out the losses that we saw from that week of the 13th of March. So overall, looks pretty sound on the rally front. We've broken through the resistance level formed by that inter dip peak, which was the 22nd of March. So this looked like a bit of a double bottom, and taking out the neckline at that 7,600 level and projecting higher from there. Overall, it looks like the measured move target for that would be up in the resistance area just below the 8,000 level. So looking pretty tasty on the FTSE. Oh, slowed down a little bit here. What's happened here? Here we go. The DAX has now got up to that resistance level that we've talked about. We've hit this point, or very close to this point, on 3 previous occasions. This decent horizontal resistance at these levels. 15,707 is the highest point we've got. We got close to that previously, but 15,700 is the area to watch. We're trading at 15,627. Today we've been up to 15,654, which is just shy of Friday's high, but it looks decent. It looks like a decent opportunity to actually retest this resistance level, and we've had good momentum into it since Wednesday. We've just been on the upward shift, so all looks good on the home front for the DAX. On short-term basis, we're looking pretty strong. We're in it's actually saying we're in an ABC correction, so it's only the B leg of that correction, but I think we could be projecting a bit higher than that at the moment. So looking for further upside in the DAX. I mean, it is quite an extended rally. It hasn't really held back. So yeah, maybe even if we do get a little bit of a pullback retest of support, it looks pretty decent at the moment. On the let's take a look at the daily chart. Start of the week, Dow was approaching the resistance level. This was formed by the 6th and 7th of March highs, all the way up at 33,500, just to either side of that. And Friday we did a lot of work and pushed aggressively higher, and we're on onto a decent start this morning. So early morning signs are pretty good for the US indices as well. So looking at that 33,600 area of resistance, well, just below there, 33,500 area, we'll call it. A break above there opens up a potential attack on those highs up between the 34,250 all the way up to 34,500. So really looks positive to start the week. NASDAQ has projected higher above that resistance level and the measured move target of the double bottom, around, just above 13,000 now. So pretty decent psychological level there. Next target for the bulls, a move to 13,700, which isn't far away at all. We can see the measured move of the bigger double bottom from the where we bottomed out in October, November, and December last year. We're could call it a treble bottom, but let's talk about the double bottom October deck. And that projected move is 13,858. So that's not far away either. So everything looking rosy on the industry front. What could go wrong? Bullish channel, obviously, in the S&Ps, and also the weekly chart. Remember, we had this big overall bearish channel, and we were close to that, and we have closed above the top of that channel. Let's get this a little bit more accurate, and we project it lower, extend right, and we just closed above that. So we can also see as well, if we look at if we take volume as a real decent indicator, we've got this where we've spent the most time. That's up at 4,345. If we take it back a bit further, we are in this sort of fast area. This is like almost like a vacuum type area where we don't seem to spend a lot of time. Below 4,000, yes, we do. Around about 4,150. Yes, that's also a time where we spend a bit of time. So yeah, overall, it looks like this is interesting, actually, taking it back to maybe the start of 2020. We are really sort of like top heavy on this, and we should find some resistance starting around about the 4,160 in S&Ps. So all looks pretty good this morning for the indices. And yeah, I'm sort of like struggling with I'm thinking about a gun to head. I'm a little bit distracted with it, and I'm struggling at the moment, but I might have to dive into my where I find solace in my gold. So I might be looking at that.
All right, cool. Well, let's just quickly run through that then. So Steve and I both picked trade ideas live on the stream in the hope that we can turn a profit between now and 9 o'clock this evening. So we have a live account. We're risking 1% of capital each. We must have stops and targets on these ideas that we come up with, and risk reward ratios that are better than 2 to 1. So on Friday, we both made profit. I was selling Aussie yen, and you were selling cable, I believe, Steve. So these are on our TradingView profile, signal_center. Steve's trade here was selling cable. If we click the play button, we can see how that run out. Did come pretty close to the stop, but ultimately did go on to reach the target. So superb. But at 9 o'clock, Steve, you were 0.91 R on side. So that will do. Very nice call from you there. Well done. And I was looking at Aussie yen. Bit of a break of channel here, looking for lower prices. If I click the play button, we can see here that at 9 o'clock, I was 0.26 R on side. So collectively, we did pretty well on Friday. Still pretty choppy, that particular market there. Steve, I was just going through the stats of your calls for the previous month. And for March, you were actually up 9.89 R on your gun to the head trades.
Oh, that's not bad.
That's very, very good.
That'll do, donkey.
I was down 0.68 R for March.
Oh, you know what? That's not bad either, is it? It's like down less than 1%.
Yeah, I mean, I was off for a few days as well, but
Yeah, exactly. Yeah.
obviously on
So
those days I would have hit target on each one, but
exactly.
I
Yeah,
wasn't
that's
there.
it.
So, but
Yeah,
yeah, fantastic.
yeah, it's nice to see the sort of account above the watermark. We started with 2,000 in January. We're just above it at the moment. So yeah, it feels good, but still a lot of work to do. We want to really sort of like come up with a on the spot idea. See if we can do that. Joe, have you got anything that's really interesting
Yeah,
you've
there's
got
one
lined
there
up?
that's helped out again by our viewers. But Rice just asked, how long do we let our trades run on gun to the head? So we actually close them off at 9 p.m. UK time. So we've actually got a expert advisor basically, because this account that we're running through TradingView is backed by MT4. So we have an expert advisor that basically closes those trades out at 9 p.m. for us without us having to do anything. So they just get taken out at that point. There's a couple of reasons for that. We do that with our intraday analysis on our service that we provide to online brokers. We also, it means that we don't have to pay any overnight fees. So that's another benefit of trading in that manner, and there's no sort of stress that we need to worry about overnight. But yeah, in
we
terms
can
of
sleep.
we can sleep, yeah. So my trade idea today, I'm looking at euro yen. So Lompra's mentioned this, and I really quite like it, to be honest. I think looking at the daily first of all, because this is kind of where the real picture builds. we can see here we've got this downtrend. Each time we've tried to rally above 144.96, prices have failed. We saw a big rejection on Friday, a swing failure at the previous high we saw in March. So for me, that should suggest that prices are going to move down, but we've seen a pretty aggressive move to the upside today. But anyway, let's look at the intradays. We can see here it's coming into a resistance that I've highlighted at 144.68. I'm a little bit in front of that at 63s. But Steve, if you can get that on for me, selling.
Yeah, I'm struggling at the moment, Joe. My Chrome seems to be wanting to crash, and I don't know.
Can I log in then?
Yeah, you can go ahead and log in. Trying desperately to sort of like get it to come up, but yeah, I have had issues with my Chrome.
Oh, he's had issues with his computer as well. I don't know what the password is. Oh, happy days, it's populated for me. Hopefully Steve will be back in a sec. Okay, so we can see here this is via TradingView. It links up to an MT4 account, and now I'm good to go. So what I'll have to do now is actually find this on Awanda, because it's probably not the correct one. So let's redraw that on. We can see here short-term uptrend, break of trend, looking to sell in and around this level here, and stop loss was going to go quite tight, well, tighter than going above the high, just because I want my risk reward to be just a tad better. And I was looking for a 50% retracement of this up move, which comes in there. So let's get that on. Trade, create new order. So I'm selling. It's a market order. I'm going to have take profit in stops. I'm going to be risking 1% of our trading capital. My stop loss is going to be at 145.42, and my take profit is going to be at 142.39. Let's just go up that. So I'm risking 1%, £20.24. Bang, sold. Okay, so my trade's on. I'm selling euro yen. Not sure what's happened to Steve. Obviously, he had some technical issues there, so he will probably come up with a trade as well, and we'll post that up to our TradingView profile. So do check back to see what he does decide to do, and that will be there very soon. Okay, so let's take a look at the day ahead. There's not an awful lot happening today. We've got some US ISM manufacturing index data, which is due out at 3 o'clock today. And then we have at 3:30 the Bank of Canada Business Outlook Survey. So if you've got any exposure to Canadian currencies or even commodities, do be aware of that. Overnight, or 5:30 a.m. UK time, we've got the Reserve Bank of Australia policy decision. And later this week, we've got some big employment data from Canada and the US. And obviously, it's a short week in Europe for the Easter holidays. So we actually won't be in for non-farm payrolls, Steve, which is a relief.
Oh, yeah, it is.
Steve, I don't know if you want to get a trade on while we've got a couple of seconds. If you've got anything that was you were looking at gold, you suggested.
Yeah, I was looking at gold, mate, but I'm just it's not really, the charts aren't really working on my end. So I'll have a little look, and I'll try and get it posted up to the screen. Yeah, it's not really sort of like, I'm not going to be able to get it on, but I will hopefully get it on in the next half hour or so.
Okay, fine, that'll do.
I'll post it.
Yeah, perfect. Okay, right, let's leave it there then, Steve, to start the week. I hope everybody's had a good start. We're going to have a good week ahead. As mentioned, it is a shorter week, so do be careful out there, and we will see you tomorrow morning.
Excellent, thanks.
Thanks, bye-bye.